Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.
Gold sector leader Newmont is looking for more copper. I'm Paul Harris for Kitco Mining at the 2024 Gold Forum Americas in Colorado Springs. Joining me today to talk about this is Natascha Viljoen, Executive Vice President and COO of Newmont. Natascha, welcome to Kitco.
Thank you, Paul, and I'm really glad to be here today with you.
It's a pleasure to have you. Now, Newmont is changing quite a bit with the acquisition of Newcrest Mining last year and the announcement of a number of divestments. You announced $450 million of divestments in Australia recently. Will you complete all their sale on time, and will you raise the money, about $2 billion you were looking to raise from the overall divestment package?
Yes. Thank you for that question, Paul. And yes, our divestment process is going well and according to plan. We kicked off the process, started off with Telfer, first off the rank, and then Achim shortly after that. And then we started the process on the North American operations. All of the processes are running according to plan, and we do expect it to be done in 12 months, as announced early in the year, and at least get to the $2 billion of value out of that.
What do you want Newmont to look like in, say, 18 months' time once this process is completed?
Paul, what my predecessors did was they've done really good work to upgrade the entire portfolio that we have at Newmont. So we now have 11 and soon to be 12 assets when our Havieron North project comes online, of really high quality long-term assets. What it gives us the opportunity to do is to shape this portfolio of assets individually and as an enterprise to be a really low cost, sustainable producer and targeting the margins to create the value that we need to, that you would expect to out of a high quality portfolio of assets.
Now, we're in a period of record gold prices, and speaking to other producers, some of the costs are starting to come down, notably fuel, which is obviously the main input into the costs of mining companies. Newmont is head and shoulders above other gold companies when it comes to the amount of dollars you return to shareholders, but you're sort of quite average in terms of your costs, your all-in sustaining costs, and therefore your all-in sustaining cost margins. How and when can Newmont become more cost competitive?
Paul, it's absolutely a focus with this portfolio of assets that we have today. The current work underhand, or that we're busy with, is to reevaluate the productivity, the mine design, the real basics of mining to address productivity and cost for starters, and then to make sure that we can do it over a sustainable period. If you consider that when we have these assets and we think about it over a 5 or a 10-year period, as opposed to thinking about it at a 1 or a 2-year period, that's very typical of how we run gold mining companies. The opportunity to step out is really an opportunity to redesign and rethink quite a number of the aspects on how we run our mining operations. So as a baseline, setting that up for starters.
In terms of redesign, what sort of things can you do to redesign existing mines, legacy mines? Does that include deploying automation and new technologies such as that as well?
100%. I think technology plays a really important role. However, technology deployed on a base that's not strong tend to mask unproductive work. Stepping back and reviewing some of our assumptions around our mine design, our long-term view on what we think gold price would do, and how we then design for longer-term assets as opposed to shorter-term and just thinking around the replacement of 1 year or 2-year resource and reserve replacement, gives us that opportunity to open up mines in terms of sequencing, space and productivity in the end of the day.
Now, we're in a period of historically high gold prices. Yeah. The senior gold producers such as Newmont, you tend to use a $1,300, $1,400 per ounce reserve price. In a high price environment forecast to extend for quite a bit of time, is that one of the things you'll potentially review?
From a mine planning and design point of view, yes. Standing back and considering what that long-term outlook would be.
Okay, now with the divestiture program, the higher gold price and falling costs, expanding margins. What will that do going forward in terms of Newmont's capital allocation plan?
I think that's a really important point, because remaining disciplined around how we think about capital allocation for economic value generation is key for us. And that capital allocation starts with capital allocation to existing assets, how we consider sustaining our existing assets, but also considering how we use the variety of assets that we have in our portfolio to generate value. That's the first point. I think the second one is then where is our capital best spent? And there will be a very strict allocation considering our commitment towards debt, cash, and return to shareholders. And only when we've done that, we will consider the capital allocation to any new projects.
With the acquisition of Newcrest, that added quite a chunk of debt to your balance sheet. Does the company have a plan to get that down to a certain amount within a certain amount of time?
Yes, we've said that we want to get our debt down to $8 billion. We've made a first step to do that already, and driven by a good gold price. So we've seen our returns. We've started to monetize some of our equity positions, smaller equity positions like Lundin and Bacha Hiju. And we've used that money firstly to buy back shares, as you would have seen, and starting to give value back to our shareholders, and we've bought back some debt.
Now, in terms of capital allocation to your portfolio, you've obviously got a number of growth and development projects. Yes. Copper figures within the future of Newmont. You've obviously taken a strategic look at the Pacific Northwest, and of course you've got the Yanacocha sulfides in Peru that's pending an investment decision. What will be the priorities in terms of your investments over the next few years?
Our priorities is where we can have high confidence in creating value and returns to our shareholders. So when we consider our portfolio of projects, is to consider not only the financial returns, but the risk to make sure that we can deliver on these projects. So Karen and I, our CFO, is building through a process on really stepping back and looking critically at our portfolio of projects, making sure that when we announce any of these projects taken forward, that we will have high confidence of delivery and returns to shareholders.
Given Newmont's push to increase its exposure to copper, will copper assets have a positive bias in that analysis and decision making?
If you consider that our focus is value, we are not specifically focused on copper or gold. We are focused on value generation. We have the opportunity now to very cleverly align our assets and our projects with what society needs, modern society needs going forward. But our aim would be value.
Okay, we are at an investor conference. What are investors telling you? Is Newmont starting to attract new money, new investors, maybe old investors that you haven't heard from for a number of years?
I think we've seen a wide variety of interest from generalist investors. We have a very strong base of long-term investors as well. What they're telling us is, tell us what you're going to do and deliver on that. So our aim here is in every aspect to be reliable, be consistent, and making sure that we deliver on the commitments that we make.
Okay. As I mentioned at the start of our conversation, Newmont is the world's biggest gold company at the moment. The biggest transaction recently was the acquisition of Newcrest last year. Do you expect to see more industry consolidation?
I think if you just look at the number of investors around at this conference, there's always opportunity for consolidation, and I think we'll continue to see that happen across the industry.
Now, Newmont's got quite a portfolio of assets. Are you still looking potentially to add what you deem great assets to that portfolio?
Yeah, I think, Paul, it's always an interesting question because we always need to look at opportunities coming our way. As where we are today, buying back our own shares would be the biggest value generation for us. And then we'll take it from there.
Now, before we came on air, we were talking a little bit about the lack of capital in the junior space. What's Newmont's views about investing in earlier stage companies to give them a bit of capital to do the exploration and potentially find the next great discovery?
I think I'll probably go back to the comment that how we allocate capital. If there's capital allocation there that will truly generate value, I think that would be an opportunity. I think as we have it today, it would be hard pressed to first look away from the value that we need to generate from our existing new portfolio, delivering value from our near-term and long-term projects.
Okay, I know we're running out of time because you're due on stage any minute now. How do you think the rest of the year will play out for the gold sector?
The rest of the year? I think there's quite a bit to be excited about the sector and the industry at large. I have an absolute personal passion about the industry because I think we've got such a unique opportunity to create value and make impact. One of my personal passions is always to think about the mining industry as it's an opportunity to create enduring value out of a resource that's in the ground that is really required for us to support modern society. It won't be made possible without the money of our shareholders. And then there's just such amazing people and talent in the industry for us to bring together to make that impact to the lives of the people who's part of our industry, the people who engages with our industry, and then creating value. So, and I think as we start to see a more consistent, higher gold price, there's obviously more and more opportunity for us to create that value and make that impact.
Well, the higher gold price is certainly producing a few smiles here at the Gold Forum Americas, and it's good to see you smiling. Natascha Viljoen, thank you very much for joining us today.
Thank you for the opportunity, Paul.
And we have a lot more to come from the 2024 Gold Forum Americas in Colorado Springs, so hit that subscribe button to see all of our video interviews. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Gold Forum Americas is brought to you by Metalla Royalty.